Hello and welcome. Thank you for clicking on this video. I hope you are well. You've probably received this email and you've come into the video, which is really good. So I wanted to talk you through the email with commentary. This year end is drawing really close. It ends on the 5th of April. As I'm recording this, that's around 10 days away. The budget was confirmed last week and had serious tax rises for business owners like yourself. If you haven't watched the budget summary, please do so. The link is on the email and it's on the website as well. If you look below here, there'll be a link to that budget summary if you're watching it close to this date. I have a 15-minute window to chat to you about your dividends. That's all it's going to need, because we're going to need some information to do it. To vote a dividend before the 5th of April so that we can save the relevant taxes, and I'll explain why in a second. I will need accurate management or draft accounts on which to base this. So if you use online accounts and these are up to date, that's perfect. It'll do the job nicely, and it's good enough to keep the inland revenue at bay. If your year end is not very soon, so if it's not sort of March, April, then we're going to need to talk to you about projections, because if your business is seasonal or it's experiencing a downturn or an upturn, we need to sort of review profitability for the next X months to the year end, because your dividends now have to take into account your trading pattern till the end of the year, because you can only vote dividends out of reserves and you can only be conservative based on what you know and allow for what you don't know up to the end of your tax year. The way around this is to shorten your year and do a year end. That way what we know now is sealed in stone at the year end, and that way the revenue can't challenge that we assumed too much profit in the following year. So that's important. If you are on our Essentials service, and that was launched last year or so, if you're on above that Essential service, then the data should be with us if you've answered all our reminders, because our Essential service includes a quarterly review, dividends, and all that sort of good stuff every year. So we should be in place on that. But if you haven't sent us the information, then obviously it can't be in place. So this video has the information you're going to need to prepare you so that we can have a 10 or 15 minute conversation. As I've said, we need good information, and this video is to sort of prepare you as to why. Now, the first thing we need to just look at, if you look at the budget report, and I really recommend you do, and listen to the business commentary, that's part 2, that's really important. That's the important bit for this purpose. You will know that dividends tax is going up by up to 33% in the next few days, and that means you're going to be paying instead of 25, you're going to be paying instead of 20%, on tax on the dividends. You'd be paying 27.5%, and instead of 40, you'd be paying 47.5%. And if you're on 45% tax, then you're going to be paying 52.5 or whatever. So just bear that in mind, because we want to make sure we use as much dividends this year at 40%. I know it's ridiculous to even think that 40% is a good rate, but compared to 47.5 next year, I suspect you understand that there is some benefit. Now, that's only worth taking out 2 or 3 or 4 years dividends, because you're saving 7.5%, but you're paying the tax now. Now, of course, the dividend could be just put into a bank account and earn interest on it, but it's important that we understand the concept. The taxes are going up by 7.5% points, which is a 33% increase or a 25% increase in dividends, depending on your tax rate, or a bit less if you're on a very high, on a 45% rate. So it's important to get that dividend voted now, and we need information to vote it now. We can't just vote it based on what we'd like to do. We've got to have information. The revenue insists that dividends are based on real profits, achievable, payable profits. And like I said earlier, you need to budget for what is going to happen to the end of the year. If your year end is September, that's a long time to budget for and saying, what's going to happen. If you're not sure of that projection, and you don't want to do the extra work to draw that projection, or pay us to do it, then we need to bring the year end to March 31st or April 6th or April 30th in a way that we can manage that expectation of profits. So in our 10 or 15-minute conversation, I'm going to make sure that you understand that bit. I'm going to make sure you understand the 40% dividend. I'm going to work through with you very quickly on your decision-making progress for that dividend, and we're going to vote that dividend before the 5th of April to protect your cash and tax position, okay? So there is a thing. What if you don't have these bits of information? So a couple of choices here. If you have a if we have done VAT return before you, then we could use this information to prepare draft accounts for a small fee. So, we do your VAT returns. If we don't do your management accounts because you haven't paid for that service, then we need to do that, and there will be a small fee attached to that. And if we're doing the year end as well, we can roll that all into a process and do that. If your year end is March anyway, then we're there or thereabouts. So the fee can be adjusted accordingly. The second thing is if you keep your records up to date on a spreadsheet, for example, and you're not using, so all of these are if you're not using online accounts. If you're using online accounts, it should be done. It's done every day. It's done every week. It's done every month. Your records are up to date. They're there at your fingertips. You can plan, okay, for tax at least, but you should also be using that information to plan for your business future. But if you're using a spreadsheet and they are accurate, we could probably use this information to prepare draft accounts for a small fee in the same way as we just described. If we're bringing the year end to March or April, then we can adjust that fee. If we're bringing it if we're leaving it as they are, we need to have projections. But we can look at doing that, but we have a very short time frame, and I have a team of people who are committed to already work. But we're going to be working weekends. We're going to be working late. I've organized overtime. I've organized a special team to work on it if you need it, because it is such a big tax increase and it is so important. Which is also why I'm going to tell you I'm putting some time aside this bank holiday to talk to you, to make sure you've got this and you understand the importance of it. If you wish, if you don't want to put the time aside this bank holiday, that's absolutely fine with me. But if you do want to spend some time this bank holiday to talk to me, earlier the better, so that you can get the information together over the 4 days of the bank holiday. Good for you. The third thing is if your accounts were prepared recently. So, for example, if we did a year-end December for you, that has some information on it which is very current, and we can use that data to vote your dividend for the 5th of April 2016. So that's important. Now, like I said, I'm emphasizing so hard that these dividends must be voted before the 5th of April. Best ways to have your data available, your dividend voucher available, your signature available, your projections, if you're using projections, available, because you do not want the revenue to challenges, because it's not rocket science, right? Any decent, solid accountant is going to be working hard to protect their clients from high rates of tax next year as best as they can for as long as possible. Now, some clients will be tempted to go, well, in June I'll vote the dividend and I'll say I voted it in March. The revenue, if they pick that up, you are dead in the water, because there is no justification, there's no data, there's no trail, there's no paper trail, there's no email trail that this has happened. Part of this video, part of this email is to create that trail for you, so you can now print out that dividend, and you'll see my next bit in a second. Will give you the option of getting that paper trail in place, so at least you're ahead of some of that problem. Okay, but we'll talk about that in a second. And so if your year end was December, as I said, or January or even February, we've got the data and we can do that. Okay. The fourth one is if nothing or none of these apply. So if you haven't got online accounts, so you haven't got nice clean data you can do planning on, work on your business and stuff. You haven't got that. The second thing you haven't got is you haven't got the VAT return data. Okay, or you haven't given it to us. You've done it yourself maybe, but it's clean. We could probably use that. Two, if you haven't got records up to date on the spreadsheet, a whole different problem. Besides that, you are required to keep good records for your business, and if you don't, the revenue can fine you automatically without limit and without question. Okay, the courts don't question it because in statute, if you prove you can't keep good books, the revenue can charge you a fine. And they can make it £10,000, £100,000. They make whatever they want and charge you whatever tax they want because you've proved you haven't kept good books. If your accounts were prepared recently, if your accounts weren't prepared recently, then obviously we've got this problem. We either got to prepare them if your year end is December or January or February, or we've got to do one of the other options, right? So if none of these apply, what happens? We're probably going to need a 5-minute consultation as soon as possible, which is why, again, I'm putting 3 hours over the bank holiday. And not for you, but for all clients who want a quick chat over the bank holiday. So if I have 5-minute sessions with people just to explain what's possible, and it will be 5 minutes, which is why you're going to have to watch this video before that 5-minute chat. So if you've texted me and you haven't watched this video, you will be required to watch this video because I'm only putting everyone's bank holiday. I can't spend 20 minutes like I can on this video to give this information to everyone, including you. I can't give that time to explain the whole thing for them. So you're going to need to know which position you're in quickly. You're going to need to know how much cash you got available. You want to know what your risk profile might be, how risky do you want to get with the revenue. You want to know whether you want to bring your year end, think about bringing your year end to March or April. You want to think about when your year end is and when your records are up to date to give to us, how close you are to having all your data ready. You need to get this ready because we've got 10 days, okay? These will be 5 to 15-minute calls. They will not be more than 15 minutes. I cannot give up more than 15 minutes on a bank holiday to explain this. This is why I'm doing this video, please, to make sure you've got it, okay? You understand the problem. The 50 minutes, I promise you, if you've watched this video, it's going to be fast-paced, solutions-based. You've already heard the arguments. You can watch this video 2 times, 3 times. It's going to be on YouTube, so you can sort of, go to the right place in YouTube and play that section that's relevant for you. I talk quickly, but you can, it's on video, so you can always replay it. And it's really important that you watch the video before we have that call, because we're going to go, this is what we need to do, this is what we need to do fast, and this is what we're going to need it by, and this is going to be the cost for getting it done in time, okay? Now, if the cost is higher than the 7.5% tax, there's no point worrying about it, right? Because no big deal. There's no point paying 7.5% for costs and saving 7.5% for tax. It doesn't really make sense. As you know, I'm not doing this for the money. I'm doing this to make sure that we save you tax, and you end up with more money in your pocket, not more money in my pocket. So you will need to text me on my mobile to request a callback. I will then tell you what slots I've got available, and you can pick one of those slots if there's more than one available. You can download, and again, it'll be approximate because I'm doing this on group, so people will go, oh, I want to call between 1 and 2. So somewhere between 1:45, 2:15, you'll get the call. That sort of idea. You can download the dividend voucher template here if you have a good feel. So on the email, I've actually put it on. You can download that dividend at minimum. You must download that dividend voucher. You must download that dividend voucher and complete it with some numbers to having considered your profit position, your cash position, and your feeling about the year. And at worst, that's what you must do, okay? It is a high-risk strategy because the revenue may ask, where did you get this data from? And if you go, well, I just felt it was the right number, it's going to fail. And I can't tell you anything different to that. It will fail. So I don't recommend you do that. I recommend you sort of get some figures together and then do the dividend voucher. That's what you must do, okay? But download that dividend voucher in the first place, because if we have a conversation on the 5th of April, at least you will have the dividend voucher to write your name in, write some numbers in, and put it down as a conversation with me. High risk strategy. Okay, keep that in mind. It is a high risk strategy. Keeping good accounts is the only way. If you don't use online accounts, and you can see from this, online accounts is probably the only sensible way for a small business to organize their financial affairs. It has benefits beyond just bookkeeping. It has benefits for tax planning. It has benefits for business planning. When we have our profit multiplier program, we use these accounts regularly to make sure that we're moving in the right direction. And because we bring focus to the business owner, to the right place at the right time on a regular basis and give them, and we create projects together which we focus on one at a time, things get done, profits go up, over 2 years, doubling of profits. So that's what's possible. But the starting point is your data. The numbers tell you a story. And if you haven't seen my number story video, please go and watch it, because the numbers will tell you where to focus on, which button to push, which thing to tweak, which area to give attention to. I keep harping on about it because it is so important and it's so ignored. If you're living in some distant past where you just do the best you can and you have some money at the end of the month and somehow the tax gets paid, those days are gone, right? If you are upgrading your phone on a regular basis, you need to bring yourself up to speed in the financial control of your business. It's crazy to have a phone, a modern phone, but have an archaic accounting system for your business. Your phone may be important for your business, but your business is important for your life and your livelihood and your future. If you don't manage that, goodness me, forget about cars, forget about property. All of it pales into insignificance without a decent business provide the income you need to grow it, and to grow it easily without working 60, 70, 80 hours a week, without having stress, having enough money to go on holidays, buy the cars, buy your new phones, buy nice houses, invest in whatever shares, property, whatever it is you're going to invest in. It is the way forward. The links are below for some of the offers we've got for, accounting software is cheap. We even throw it in now for some of our services because it is essential. I'm not going to go, I could go on, but I'm not. It is essential. And so keep that in mind. Okay, so the links are below this video. And finally, we do require your fees to be up to date for this service. Okay, so if we've raised fees for you and we've agreed fees, we always agree fees in advance. We never work on we're just going to bill you whatever time we spend. We never ever do that. We're super fair, and everything is agreed with you in advance. Now, if those fees are not up to date, we will not be offering you this service. I'm afraid clients seem to feel that they can take their accountant to be the last person to be paid. I had a client the other day who goes, well, why are you chasing me? Don't you know that I haven't been paid yet? Well, look, I'm in business just like you. If you choose to do work for people who don't pay you, that's your prerogative. I can't anymore because, it's just bad business. I don't recommend you do it. And I'm going to take up my own, my coach and mentor told me, look, Gordon, what are you teaching your clients? You're teaching them that you're the bank. You've got more money than the bank has, so you'll give them the money and lend them the money. Sorry, that's not going to happen anymore. We just need our fees to be up to date. It's a fair process. If you can't afford the fees, then we shouldn't be acting for you. And unfortunately, that is the part of the process. I work so hard for you guys, and I do need to be paid on time. Okay, I do not hire a team of people to chase you. And at the moment, I'm hiring a team of people to chase clients for fees, and that is just wrong, and it cannot continue. So I'm going to stop that. So fees up to date. Otherwise, we can't offer you this service. So if that offends, I really apologize, but it is. Fees must be paid on time. If fees aren't paid on time, I can't work. It's just it offends my idea of what a good business should be, and I run a really good business, and I teach you how to run a good business. So please. So I'm going to look forward to speaking to you soon. It's been fast paced. This video, it's been longer than I'd probably want, but it is so important. It's going to affect. It could save you. One of my clients the other day, we did the calculation, £7,500. Crazy amount of money, isn't it? And so £7,500 was the extra cost per year. So we managed to save him 3 years fees by planning, 3 years extra tax by planning it now because he had the reserves in place. But everyone is going to be different. Okay, so get your planning point in, watch this video, get ready for that 5 to 15 minute fast-paced solution-based call. It's Gordon De Silva, out of breath and needing a cup of coffee. Talk to you soon. Bye-bye.